Hello and welcome to the final part of my little series on setting up a craft business. And I thought I didn't really want to sort of leave this series without mentioning briefly a little bit about the legal framework for a business. Now, it may well be, I'm just give my own personal story here. I started out really with this sort of business as an extension of my hobby. So I was making tool covers for friends, tool rolls and a few belts and things. And I started things off very small and my earnings sort of crept up slowly. You'll find in your sort of first year or two, chances are you're spending quite a lot on setup costs of one sort or another. So those will actually keep your earnings down quite a bit. Because, you know, if you earn £100 making a couple of items or whatever, chances are you're having to buy quite big bits of material to make those items, like, you know, large sacks of clay or large hides of leather or whatever. So your earnings in the first year or two, chances aren't going to be that high. But as you pick up, obviously they will. Now, I'm in the UK, so what I did initially, and at the time I was under an employed earner, so I was under the PAYE system of tax collection, etc. And you can earn up to something like, and the rules vary on this, so I almost don't want to give a figure, but it's something like £1,000, but don't quote me on that. And you can have that then taken account, you can declare it under your PAYE system. So if you're an employed earner, basically what I'm saying is, under the current rules, you can earn a certain amount of money, not a huge amount, and just declare that and it will get taxed. And that's all fairly straightforward. I then went above that threshold, and at that point I say I'm in the UK, I spoke to the Inland Revenue, our tax collecting authority, and said, look, I'm now going to be earning something like X. And again, it wasn't very much money at all, 2 or 3 grand, something like that. And I said, can I continue under the PAYE still? And they gave me a short-term dispensation. Now, I'm not saying they're going to do that all the time. I'm not even certain if they do it to someone else, but that's what happened in my personal case. Going back now a few years, as I say, everything may have changed. But if you tell the Inland Revenue what is happening, or the Revenue Collection Authority in your own country, they can probably advise, and then at least you're not seen to be dodging tax or have any accusation like that made against you, which obviously you don't want. So I would suggest you talk to the tax collecting authority if in doubt. There comes a point where you have to then make a decision whether you're going to set up with a more formal legal framework, and that might be a sole trader or it might be a limited company. Again, in the UK, and as I appreciate, this is a difficult sort of area to cover because it will vary a lot and the rules could well change regardless. But at the moment in the UK, if you're earning more than £1,000, you have to register with the revenue as self-employed, and you can then become a sole trader, as it's known, working for yourself. It's fairly straightforward. You have to prepare basic accounts. It's a kind of thing that, you know, your local plumber might be doing. The other option you have is to form a limited company. Now, generally, you'd probably be doing this if your turnover was going up quite a bit, or if you had other assets that you wanted to protect. The main, if you like, argument, in my opinion, but as I say, you may want to take advice on all of this, is if you form a limited company, then that is a separate legal entity to yourself. And that's an important point. If something goes wrong with your business, the company will basically lose all its money. If you have a house or something, that should be out of scope and therefore protected. As I say, if you are going down this route, please do take professional advice because it is constantly changing, or it may be different where you live as well. But the advantage of a limited company is protection of other assets that you might own, in broad terms. It's far more complicated becoming a limited company, because you have to do a whole host of statutory returns. So you have to prepare formal accounts and you have to do other returns. Now, I chose the route of becoming a limited company because I had other assets I wanted to keep out of my business. There are pros and cons. I think it gets to an area where you probably do need to take professional advice. If you go down the sole trader route, do make sure that you have public liability insurance, product liability insurance. You're covered basically from if something goes horribly wrong with something you're making or something about your business, to protect yourself. If you are, if your turnover is going up and you're becoming a bit more serious about it, I'd suggest you have a chat with a professional who can give you proper, current, up-to-date advice. There are also, to help you, some very good guides you can look at both on the internet in general, and obviously you can get books on it all, so worth doing that as well. I'm really here just wanting to give you, if you like, a flavour without attaching any authority or weight to any of this, because it will vary over time, it will vary where you live. And I wouldn't want to sort of set anyone on the wrong track, but I'm just trying to give you, if you like, an overview of the options there. So that's a sort of legal framework you certainly need to be considering as you move along on your journey of running your business. It's a great journey. I hope that the little sessions that I've been running have perhaps inspired you to have a go and make those initial steps. Anyway, I wish you best of luck and thanks so much for watching. Okay then, bye bye.